Hey guys, Chris Clothier here with another episode of the Grind Podcast. Whatever day you're listening to me, I hope you're having a fantastic day. I know it's been fun for me. I've got a new topic for us this week as we dive right into our latest podcast, and it's all about picking a winning market. As a real estate investor, it's a question we get all the time. How do we do this? How do we know if it's a good market or good time? Is it going up? Is it going down? And the reality is, the answer is we don't. We don't know. Nobody's got a crystal ball that's going to say this is what's definitely going to happen in the future. And things can certainly change. But there are a few indicators. There's a few things that we look for as a company. And I thought, what better topic than to share this so that you guys can kind of know that, hey, this is what we look at whenever we are, doing a market analysis and deciding that we want to go into a market, or we found a new market that we want to, be looking at. So with that being said, this week's podcast is all about market analysis. All right. And I was telling Isabella that for this one, the cool thing about this is that I can go back and I can look at and I actually get to share exactly some of the stuff that we look at and the exact way we go through cities, because we've sent our team to this point. We've sent our team to probably 20 plus cities. And today we're operating in 11 markets anyway, a couple more cities because, Dallas and Fort Worth, same market, two separate cities, but just the same. We go through and we send our team. They have a bit of criteria that they've got to pull up and do research with. And then we want them to get on the ground and go, take a look around, make some calls, do some inquiries, and kind of come back with some general feelings. I'll tell you how to do that, especially if you don't have time to go visit the market. So with that being said, let's jump right into it. I hope you've got a pen, pencil, pad, whatever it is you're going to take some notes on ready. If you're a real estate investor and been wondering how the heck do I know if this is a good city or not, or which city to pick, this is how you do it. All right, so for us, we first start with kind of like geographical area. So we're looking at the way we operate is we started in Memphis, Tennessee, then we went to Dallas, Texas. Those two markets were easy for us. Why? Because we knew them. That's the only reason why we were there. It wasn't so much, it was none of the other stuff that I'm looking at. Dallas was easy because it's one of the largest, metropolitan areas in the country. Memphis was easy because it's where we started. But both of these cities are where our family was born and raised. We still have business contacts in both of these cities. They were just the natural first two cities for us to start in. Just so happens that when you look back at data, each of these cities provided a pretty damn good model for us to be thinking about, kind of going forward. So when we started looking at new cities, some of the first stuff we started looking at, we wanted to know about the employers within the city. It's very high level. We weren't necessarily looking at who the specific companies were, but we wanted to see what kind of jobs were being created in these markets. We wanted to know, because it was super important to us, that there was a diverse mix of jobs. Not everything came from just one particular industry. And we wanted to know that there was, room obviously for job growth within those, particular industries and markets or whatever. So that's the first thing we looked at. When we find out and we kind of know who are the top employers within an area, the next thing we started looking at was job growth data. We wanted to know, and I don't just mean, while it's important that we see the number of new jobs created. That's a really good number to look at, but it can be deceptive, and I'll explain to you why or how in a second. But so we want to look at new jobs created the last, short time period. You can look at 6 months. We also want to see 12 months and 24 months, and we want to see what kind of some of the I guess the flow of it was it growing? Was it not growing? Were they creating more jobs, or was it, kind of leveling off? What's going on with job growth? We compared it to the national average because I wanted to see, all right, so what does the national average look like? And then I wanted to see what a 10-year expectation is. The reason why this is so important and new job growth is so important is that with every, within every city, you got this new job growth, but you also have job loss. So there are always companies that are closing down. There's always companies that are moving headquarters, shifting production to somewhere else in the country. All types of different verbiage they'll use for essentially getting rid of jobs in an area. So what I think is important for us to understand as investors is their net job growth. So 2,000 new jobs is amazing for a market, but it's not so good if they lost 4,000, because then you've got 2,000 net loss, in job creation. So you want to look at not only the new jobs that are growing and how the job growth is, but you want to look at, are they losing? Because if they're losing jobs, that's not a good thing. I always ask myself for a market, how many Fortune 500 companies are there? And if you've been listening every single week, I've had this, I cannot get rid of this, can't get rid of this dry throat, this cough. It happens when I talk a lot, and believe me, around the office, I talk a lot. So anyway, we are, I'm looking at, I'm good now. I got a little water in me. I'm looking at how many Fortune 500 companies are located in a marketplace. That's more of a vanity type thing. All right. Because the more Fortune 500 companies, that's a good sign. That generally means some form of a corporate headquarters is there. And it generally means that there's going to be a lot of, often, not always, but often high paying jobs. I will break that all the way down to the Fortune 1000 list as well, just to kind of, again, just to see what's the real marketplace look like. From there, there's some other really important financial data that I want to know about a market. And look, what we do with this is we put all this into spreadsheets. And so I've got the name of the city, and I've got all of these, vertical lines where I am just kind of listing all of this data. I can go through later on and I can highlight things, green that are great and, red that are warning signs. And then I can match markets against one another and see, which market has the fewest reds or the most greens or whatever it ends up being for positives, and decide where I'm going to go. But some of those additional numbers I'm looking at the unemployment rate. And then I want to look again at historically what's been going on. Is it going up? Is it going down? What's happening in the U.S.? Like I said, I want to look at, once I've got that done, I want to look at two other numbers, and these numbers start really hammering in on, is this in a city I'm going to look to invest in? And that is, one is the cost of living. So what is the cost of living versus what's the family median income versus what's the median price of a single family home? So that's three numbers I'm looking at: cost of living, median income, median price of home. And what I really want to find here is some form of a correlation. I want to have a relative low cost of home compared to the income, which means my cost of living is going to be probably below national average. If the average cost of living is here, I'm looking for these cities where the cost of living is slightly just below. That's going to be a place where I'm going to be able to find affordable housing and probably a lot of demand for what I bring. But here's the problem with that, especially in today's environment. That's not going to be one of the top 50, maybe not even one of the top 200 MSAs in the country. You're going to have to, those are going to be, you got to dig deeper than just that. For us, it used to be super simple. We could look at that and make decisions. Today, you're going to have to dig a little bit deeper. But I just gave you, the start of how we build out a spreadsheet in deciding that we want to look into and dig deeper into a market. One of the other things that I look at is, what's in the surrounding area. So when we chose Dallas, it was very fortuitous for us because it was a market that we knew, but then suddenly we looked up and we realized that we had some major MSAs all really close, some great cities that we could expand into, from Houston to Austin to San Antonio, up into the Lubbock, Abilene area, all the way up into Oklahoma City and across into Little Rock. All of these areas are within 250 miles or so of Dallas. maybe within 300 miles of Dallas at the most. You could get to all of them within 5, maybe 6 hour drive. So less than half day, we could get into each of these markets if we needed to. And I really like that. I like the idea that if I'm going to invest somewhere that there's like, it's in an area with a lot of demand. I love the Southeast to begin with. That's where we're going to be investing in. And one of the main reasons why we invest in the Southeast, and it was an early decision for us, we don't invest on the coasts. We don't invest right up against the beach or anything along those lines for a multitude of reasons. But one of the big ones, and it's probably one that most people don't think about, is because of the sea air. We're not real big on having to deal with the corrosion and the ancillary effects of the salt air, the salt water, and what it does to a home. Just like we try not to invest too far north. We don't want to deal with the harsh winter and the additional cost, the ancillary effects of snow, ice, snow removal, ice removal, the use of salt and different chemicals to be able to melt ice, and what it does to the home, what it does to the different parts of the home and the upkeep and the kind of the how you're going to own and keep this asset at its highest value into the future. So, I've given you a lot of things to think about, even, over the first, a lot of things to think about, even over the first 10 minutes of this podcast, in that, and none of it is like, how do I know if it's an emerging market? You don't. This is all just, how do I even determine if it's a market I want to go to? I just boiled us down to markets where it doesn't snow and markets where we don't have salt water. Generally, I prefer markets near where I'm already at, so I'm sticking within the Southeast. That's where we are today. Some additional stuff that we look at when we're looking to decide to go into a particular market. I want to know what the population is. Okay, I want to know what the percent of the residents in a city rent their homes. I prefer single family homes. You'll get skewed if you look at apartment data as well. I really want to know what percent of the population rents their single family home. Okay. I want to know what the average vacancy is for this area. So how often, what percentage of the homes are sitting vacant? That can be deceptive because sometimes, all those vacancies will occur in areas where you're not even interested in investing to begin with, but you definitely want to know. Some other things that I want to look at. I'm looking at new household formation on an annual basis. That's going to tell me how many new people are going to be coming in looking to rent houses. Then I want to get into my actual real estate market analysis. A big thing I want to ask myself is, are there any institutional investors buying here? Because institutional investors, they just drive the pricing up, especially the price points they're looking for. So there's nothing wrong with that if you're not buying in that same price point. But if they happen to buy in the same price point that you're wanting to buy in, you're going to have some massive competition. Main Street Renewal, First Key, American Real Estate Investments, to name a few of the big boys, the big players that are out there. You just want to know. And then you want to, when you look at the median priced home, all right, that's cool. What percentage of homes are $50,000 below and $50,000 above? And directly within that. So if 20,000 or 20% of the houses are, $50,000 below median and 18% are $50,000 above, then you've got some pretty big swings in prices here. You're going to have some really cheap stuff and some really high expensive stuff. Depending on what price you're looking to go for is where you want to kind of determine, is this the right market? Am I going to have enough houses here for me to be able to get? Then you want to know, for us anyway, I only want to stick with 3 and 4 bedroom homes. We will do 2-bedroom houses. In fact, we're starting to do a lot more of them now. But early on, we really want to decide on the market based on the number of 3 and 4 bedroom homes there are. So I want to find out what's the rent average for 3 and 4 bedroom homes. All of this information you can find in various different sites on the internet, especially if you just Google specific questions and queries, you'll find back, what it is you're looking for. Okay. So that's how we begin to look at particular markets and some of the questions that we ask. And we literally, and I've just pulled one up here on my screen, we literally put together a Excel spreadsheet, and we want to see all this data. So Memphis, Dallas, Houston, Little Rock, Oklahoma, and whatever. We'll say Kansas City, because we're not in Kansas City today. Kansas City. We would line them all up next to each other and see how they all rank out. See how that market ranks up against these other ones if that's where I was looking to invest. And then once we decide that we're going to go into a market, we want to go into a market, the final decision maker for us really comes down to, what's the story that we're getting? What's the vibe we're getting? And the way that you figure, one of the things for us, a good way to figure out what's happening within a market, I think there's 49 business journals around the country. So there's 49 major markets with a business journal in them. If not, there's some other form of a business newspaper to that market. Subscribe to it, find it online, read it. All right, read it. Read what's happening. What's the business world saying? What's now you're getting away from the stats and the data pieces, and you're starting to read into it. Who's coming to the market? Who's excited to have, build a new hotel here? Who's excited to move a new headquarters or do a new distribution facility or a new manufacturing, plant? What's happening within a market itself? It is really, really important that you understand. Housing is driven by demand, all right? And no matter what anybody says, you go back through economics and you can see where as wage growth happens, as job growth occurs, you have an increase in both housing cost and housing value and housing costs. So that means the value of properties and rent increases. So, it all correlates. This entire economy is kind of strung in together. So, you find a market that is growing, then you're going to find a market that has the opportunity for you to be able to get into, own something, get something under control. If you ever, you listen to me enough, you understand that I don't like using leverage to hold. I love using leverage to buy. A 30-year mortgage is an absolutely fantastic tool to be able to control real estate assets with. And so if you find a market and through the business newspapers, you see that, man, there's just a lot of good stuff happening within this market, then and it matches where housing affordability is there, which means you can buy housing and rent it for a positive return. And it's highly likely that pricing will continue to go up based on demand as you see population growth and job growth. That's why those two numbers are so important. And even these small, these tertiary markets, these low-tier markets where there's just we're not talking about the major cities, these really outlier areas that have good, solid population. They have good job growth coming because they're located just outside of major metropolitan areas. These are places to go. These are places you want to be buying in. For us, we're, again, I'm a big company, so I'm a little bit different, but tourism plays a big role. We love to read local blogs and see what's happening, what's going on with the food scene, what's going on with the art scene. When you read these local blogs, you really get an idea of how the real vibe of a city. You get kind of the dirt, the grimy underside of what a city's going to be like. You get away from the tourism board that's going to tell you that everything's is cupcakes and roses, and you're going to find out what's really happening. You get to find out, is the city moving in the right direction or not? What are the politics going on in the city? What's happening with, are they getting ready to ban all investment homes and, all rentals? Are they going to put rent controls in place? You find all this through really digging into a city and reading about it. And if this sounds like this is crazy, like, oh my gosh, I just don't have all that time, I'm literally talking about 8 hours. 8 hours of time. You spend 2 hours a night over 4 nights. You could have all the research that you actually need. Don't go crazy with this. Pull up the data from U.S. housing stats websites, compile it, research each city that you think is actually worth going into. And then if you're looking for, okay, now what do I do next? Because I found a great city, a market that's going to be exploding. I think it's a great place for me to be able to go. Everything I can find out about it is positive, but it's 1,000 miles away. Well, then there are next steps you take. Absolutely. And we don't need to go through that today because that's a whole nother podcast. But there are steps you can take then, whether it's building out your own team or it's now you take that city and you research, are there passive investment companies? Are there turnkey companies there that actually operate at a high level as a turnkey company? I've done so much on that through these podcasts, but I would be happy, look, that's something that, Isabella, we should put down for the future. We should talk about, those next steps. Once you've decided a city, how do you go about vetting turnkey companies or management companies or finding a great realtor? I mean, building out a team. I can talk about that all day long and the pros and cons of each, whether you build it yourself or whether you go with a proven turnkey company. There's pros and cons to each. And most of the pros and cons really don't have to do with the company. They have 100% to do with the investor, whoever, you, the investor out there listening and watching. It's you. You're going to be the one that's going to make a break, whether you do this yourself or you go with another company. So anyway, guys, that's how we, it's a real high level down and dirty on how we go about picking markets. Is it scientific? Yes, but no. I mean, we kind of get a feel for when the numbers start lining up and you start seeing a bunch of green boxes, you know that, hey, this is a market we'd love to go to. Doesn't mean we're going. We still may not be able to find anything. There may be so much competition at the price point we want to go into that it wouldn't be worth our time. Or it could be the other way around. And the same thing can happen for you. But that's really what we do. We get some data together and we just make decisions that are rational based on what the data tells us. And if you do that as an investor, if you make decisions based on, I know what I want, all the data points to I can get it in this market, most likely you're going to be making good decisions, all right? Don't rush it. Definitely spend the time. Compile what you need to compile, and then get after it. This is a great way to figure out the cities that you like, that you connect with. I will leave you with this last piece of advice. Because your old college roommate lives in a city and they love it, that's not a good reason to invest there. Because you passed through it on vacation one time and fell in love with the charm of the city, that is not a good reason to invest there, okay? We only invest in places today, after Memphis and Dallas, the only places we ever went to from there and invested in were cities that made sense based on the data, okay? So with that, I hope you took some notes. I hope you're having a fantastic start to your weekend, getting ready to kick it off. If you're kicking your week off, make it great. Until we get a chance to meet again here on the podcast, guys, I hope you commit to the grind, and we will see you soon. Thank you.